What is up, good people? Jungle Inc. here. Hope you're doing well. We're going to cover that recent launch of the XRP ETF. We're going to talk about Monica Long, her vision for the path forward here for Ripple and XRP's value. We're going to go over some big announcements with Mastercard and stablecoins. There's quite a bit here. We look at the market right now. Everything looking pretty good. Bitcoin sitting just under 95,000. It's up 7% on the 7-day. Even Ethereum, look at that. Ethereum up 14% on the weekly, pretty good. XRP as well up about 10%. So everything's looking pretty strong. And again, we got some big news here, some big developments. We're just waiting to catch our feet here and get running. Now, we had this announcement that I don't think people were clear enough about yesterday. They just said that, you know what, there's a ProShares Trust XRP ETF. And of course, the whole world's waiting for spot ETFs. That's the end game, but this is still a big deal. Again, this is going to give you trading of futures. This is a futures ETF. They're not going to dip into the market and buy XRP or sell XRP, but it gives you that regulated trading history, which is important when we finally go to get a spot XRP ETF. We've checked all the boxes. We got the regulatory clearance, the court case settled. You have the demand there for this token, lots of trading volume, and now you have these futures that have been trading on a regulated market. It's all over Red Rover. This thing's going to get done. Now, I saw a lot of master panics out there that were saying, oh no, now people can short XRP. That's the part of any market, any mature market. You can't just make money on the upside. People are going to want to be able to short assets, whether it is, a trading approach, whether it is to hedge investments, whatever it may be. That's part of it. You can go long, you can go short. Thus is the real world in the big leagues where we find ourselves now. A lot of people saying, well, when Bitcoin, when it got ETFs for the first time, futures, the price went down. Well, that was the start of a vicious bear market that stretched from 2018 all the way to 2021, essentially. That's not just because of futures and the ability to short the asset. That's just kind of where we found ourselves. So I think this was a big development. It's just one stepping stone. But again, everyone was just saying ETF approved. They weren't explaining it was futures. Most of you out there probably already knew that. But this is one more step getting us so close to an XRP spot ETF. And that's going to happen. And hopefully this year, most likely this year. Now, Monica Long, she confirmed, look, right now we're not planning to do an IPO. Eyes are on growth through acquisitions. And I think they're also going to grow their stablecoin business, their custody business, everything they're doing. Payments, now as they have that stablecoin rocking, I think it'll make them more efficient. They can grow that as well. Ripple will focus on strategic acquisitions and expanding its business instead of tapping the public market. XRP remains central to Ripple's plans. So we know that. Now, here's the thing. Here she goes again with this. It's vital for gas fee stuff and reserve requirements. Couple of things here. First of all, the gas fees are arbitrarily set. The reserve requirement is arbitrarily set. We don't have to have either of those. It's not really necessarily a value for XRP. I mean, it's a use case in the network setup today. I wish she could go a little more exciting use cases for XRP, and I think there are many that go far beyond gas fees and reserves, but it might be part of this SEC case is still technically going on. We're still seeing guidance from the SEC on what you can say and what you can't. And also, what XRP is good for and what they use it in their business for is two different things as well. So that complicates matters. So I just hope eventually they get that fine-tuned a little bit. There's a lot more exciting use cases for XRP than freaking gas fees. Ripple aims to bridge traditional finance and blockchain, offering custody, stablecoins, and services. We understand that. And fiat on and off ramps. In 2025, Ripple's growth strategy is clear: build, acquire, expand. Now, listen here. It's not totally true that, hey, we have enough money, we don't care about IPOing. They care about going public for a lot of reasons. One, they want that stock to be very liquid. It makes it easier to hire big-time employees and executives where you can give them a stock compensation package, and they know that price hopefully goes up significantly over the long term. When they do go public, the value of the company is probably going to go up quite a bit. It's worth about $12 billion right now. I see that price hopefully escalating significantly as they work closer. I think they just have to build out this company a bit. And they're going to do so again by acquisitions like we just saw them do, ones that complement their existing business, and then just growing and being more efficient in their payments and their custody and all that other stuff. Just a little bit of time. I would not be surprised if it's sometime in 2026 we see this company do an IPO. I think they're getting close, a lot closer than they were a year ago, where I was telling you when there's all the IPO hype out there, that ain't happening. Well, now I think they're getting closer. They just got a little more work to do here. This was a huge one for Flare, breaking Tether's USTO, now live on Flare. This is interesting, and this is bringing on a liquid, a known, a used stablecoin on network. They don't have to grow it, the brand name over time. It's ready to rock and roll right now. And it's the omni-chain version of USDT. It's backed 1-to-1 by USDT on Ethereum, but now it's a lot faster, a lot cheaper to use. And actually, there is no gas fees when using this stablecoin on Flare. You look at a lot of chains, it's people in areas that want to use that as a currency, that want to use dollars, and they're using stable coins. That's a big attraction to Tron. People actually use Tron to a high level just for stable coins, Tether being one of them. Here you have, a next level blockchain with Tether that you can use with no gas fees. That's compelling. You may get a lot of adoption. Further, at least for now, as they try to bootstrap things, you can earn 30% APY on the USDTO that you hold. That's not going to be something that's sustainable for the long term. This isn't like a Terra Luna type situation where supposedly it's built in there and part of the overall protocol. This is just incentivizing you to start using it, start holding it, and get comfortable with it. Also interesting enough, when you look at this, they're not using risky wrapping techniques or bridging. They're using layer 0. So this should be a safer way to move value, not only Tether onto Flare, but to multiple blockchains, which is where Flare wants to sit there, is this hub, this interoperable hub, this blockchain of data. And again, it's backed by Tether Layer 0 and Stargate. USDTO is designed to unify liquidity across multiple blockchains, now including Flare. That's killer. That's going to be a big one that drives adoption, that drives people to, you know what? Let's do this. Let's collect our 30%. While we're doing it, let's try it out. Let's do some transactions. I think that really could be a bold move by Flare that will work out well. Now, Chamath says the following: crypto acquisitions and public listings in the U.S. reached $8.2 billion across 88 transactions in the first 4 months of 2025, already tripling 2024's crypto deal making. This has to do with Bitcoin treasury acquisitions, mergers between traditional finance companies and crypto infrastructure companies. We'll look at some deals there, in the news today where you see that. And then institutional service acquisitions. Ripple, we just saw them with that prime brokerage. That was a big acquisition there. Consolidation of crypto exchanges. So Kraken and their purchase of NinjaTrader. You're going to see more of that, I think. And then lastly, this isn't one that is just happening this year. This has been in the works, but mergers of tokens. And we see that in the AI coins of Fetch, Ocean, and Singularity Net. And I think we're going to see more of that. I mean, we don't need this many coins, but there's quite a few that, there's some value there. It's compelling if you merge a couple together and now you really have something. So I don't think that this will be the last time we see this, where multiple coins kind of merge together to make these, mega blockchains, if you will. It's going to be interesting. I think they'll have to work through that and figure out, what the process is going to be going forward. But you may see, even with something like meme coins that have a community, merge with something that has utility. You can have some of that stuff going on as well. There's a lot of options for the future that could be quite compelling. This was a big one. Mastercard launches global stablecoin payment system. And what I first think is this: hey, this is great. It's a usable way with your card. You can use your stablecoins. But I bet you Ripple's going to jump in here and land a similar deal. And to me, the perfect partnership, American Express. Someone Ripple's worked with for a long time. When this court case is totally out of the way, Ripple scaled up their infrastructure a bit. American Express and Ripple, let's see if that happens. That would make an awful lot of sense here. We see Mastercard, 1.1 billion users, unveils a system supporting wallets, enabling card issuance, merchant settlements, and on-chain remittances. So we're using stablecoins for a practical purpose, all wrapped in a a mechanism that we're all used to using, regular credit cards or debit cards, whichever. New OKX cards will connect crypto trading to real-world spending at over 150 million merchants globally. We want to make crypto more usable, so you can hold your money in XRP or Ethereum or whatever, trade it out into stablecoins when you want to spend it. You don't have to wait for transfers. You just start swiping your card. This is compelling. This is big time. The partnership includes OKX, Circle, Paxos, with wallet integrations of MetaMask and Kraken. So you got a lot of different ways. You can self-custody your crypto and still use this service. You can have money on Kraken. Probably other exchanges in the future. If this is successful, this is really the kind of thing that will make blockchain more usable. And that's what's important. We want to use blockchain for the tool it was designed to be used for, not just a coin that you hold and hope it goes up in value, because the usage is what's really going to skyrocket things. Adoption of this technology. Coinbase, they're introducing Bitcoin Yield Fund, seeking 4 to 8%. The fund targets institutional clients, so this isn't going to go out to their regular users that are looking for passive returns on their Bitcoin holdings. Of course, you have things like Ether, Solana, and other proof-of-stake blockchains that earn staking rewards. We don't get that in Bitcoin, so this is a way to do that. Coinbase's Bitcoin Yield Fund differentiates itself from others that require institutional allocation to take on significant investment and operational risk. So they're claiming at least that they're going to bring that risk down and you can make some return on your Bitcoin holdings. Now, how much risk are they taking on? Well, they're institutional investors. They need to assess that for themselves. But it's another way where you have this coin that doesn't have a way to earn any yield off of it, this investment. Maybe you don't want to wrap it, put it on another network. You think there's too much risk there. Maybe you like what Coinbase has to offer more. Tether, again, their gold-backed Tether product is backed by 7.7 tons of physical gold stored at the Swiss vault. Tether declared it has passed its first attestation. So it's not an audit per se, but they're starting to get things in order. That's interesting. Having tokenized gold makes it much more liquid, easy to use, easy to hold. I think we'll see more products like that as we move forward. Paul Atkins, I'm so excited to see him already finally actually in his SEC chair position. And the SEC's been busy. Even before he got there, we've seen roundtables launched. They've softened their litigation. If something wasn't a fraud case, they're closing it out, as we see they're trying to do right now with the Ripple case, waiting to hear from Judge Torres if she accepts what they put forward. I expect she will. They prioritized stablecoins, exchange registration, and token classification. So they're working through this thing, and I think it's just going to pick up the pace now that we have Paul Atkins in that chair position. And this is going to be the first crypto roundtable that he's going to participate in coming up here. Arizona becomes the first U.S. state to approve strategic Bitcoin reserve. This is important for a few reasons. First, it's going to be great as you have these states and these nations that start acquiring cryptocurrencies, as we've seen the United States start with, and you're going to see a lot more. And they have the Bitcoin reserve, but also altcoins, right? They have that allocation of that actively managed portfolio with altcoins. I think you'll see states and nations follow suit with something similar. But I think what else this shows is, this passed. And Bill SB 1025, this is popular with voters. And it's going to be something in future elections. If you don't pay attention to the crypto space, it ain't going to be good for you. It's going to be harder and harder to be hostile towards this industry. And, this should be a bipartisan thing. This is about innovation and what's good for the United States. And, hopefully it becomes that. It's going to have to, or it's going to be very hard to win elections, because you can see once again that this is very popular with the voters. Now, it's up for the governor now. He needs to sign this thing into law. There's a political standoff right now. Maybe it gets delayed. Maybe it gets blocked. I don't think that it would be politically popular, though, if they don't pass this thing. They better do it. They better sign it into law, or the governor may be in trouble here. The gap is bridging. BlackRock right now has just a little bit more Bitcoin in its holdings and strategy, just 20,000 away. But really, I think over time, you're going to see BlackRock pull away, because it's not one company's holding, right? A lot of major investors, a lot of institutions, they're going to use an ETF as a mechanism to get exposure to cryptocurrencies. I actually don't want to see strategy that close to BlackRock. I think, you want BlackRock to be dominant over strategy. Not because I like BlackRock better, it's just a more diverse group of holders, not concentrated into one singular company. Lastly, we're going to hear Mr. Wonderful. He ain't digging this idea. So it's been floated out there. You know what? We have maybe 15% tariff across the board, and then no income tax for households that make 200,000 or under. Let me play this interview, and then I'll come back and see what you think.
Concerned about what I would call class warfare. When you take a huge segment of society and say, you don't have to pay tax, we're going to put that burden on either tariffs or the rest of the population here. Very uncool, because all of a sudden, you're not contributing. You're not helping anybody out. You're not paying any tax whatsoever. I'd rather just see a flat tax of 19% or whatever it's got to be, and everybody pays it. It's not right. And tariffs, by the way, should be strategic. Not every country should we tariff. We may want to say to ourselves, China is the enemy, and they are. I don't care what anybody says. We need to spend billions defending the northern border of North America. That's actually Canada. We shouldn't tariff anything in Canada because they have all the stuff the Chinese have, the minerals, the precious metals, the resources, all that crap that we're buying from China. We don't need to if we cut a deal with Canada. Why would we tariff that? Potash. Why do we want to tariff potash? Saskatchewan has all the potash. So I say zero tariffs on the strategic. And if you're not playing ball with us like India, okay, whack them with tariffs. But now when I hear India, and I love your idea, you know why the Indian deal's best first? You get to sell a Ford 150 into the rural area of India that you've never been able to sell in 20 years. 110% tariffs. I love that deal. So I say let's get more strategic, because Bassett said the same thing. Let's look at everyone on a bespoke basis. I like that. Now we're starting to fine-tune this tariff stuff. And that's why the market's already gained back 50% of what it lost on April 3rd. Today, we're 50% back.
I still believe.
That's an interesting conversation. It's unfair. If you did 200,000 and under, if you said they don't have to pay any tax at all. Look, at this point in time, we have segments of the population, income levels that don't pay any tax. You have people that, they don't pay any tax in and they still get refunds. So what is fair is kind of arbitrary. I think it comes down to, could they execute that? In my opinion, and I'm no financial guru here, but when you look at the numbers, I think tariffs would have to be too high to replace that tax roll, people that 200 and under that are paying an income tax. I think it's just going to be kind of budgeting reasons, not because it's unfair per se. Let me know if you agree, though, with Mr. Wonderful, or if you think it'd be plenty fair if people earning 200,000 and under didn't have to pay tax. Now, what he said, I think is correct, is you're going to see different rates for different countries because they're going to use tariffs, and they already do, the same way they use income tax to really control people and companies and how they act and the things they do. They give you credits if you have children and you buy houses and you put money in your retirement. That's how through tax codes they kind of control your actions. And they're going to do the same thing with tariffs. They want, some of that production coming out of China. Not all of it. It ain't going to happen quickly, but some of it coming out of China back to the US, India, Latin America, different places in Asia. I think they want to distribute some of that in the best way they can. Again, that's not a quick thing, but they will start that process, and I think they will use tariffs in a strategic manner in order to get that done. Just the way I'm seeing it, though, I don't think it's going to be a really fast process, but time will tell. Let me know what you think about both those issues, though. Do you think they will strategically use tariffs to try to pull some of that manufacturing and start that flow out of China? Will it be successful at all? And would it be unfair if people 200,000 and under didn't pay any tax? Let me know what you think. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.